And welcome back and Happy New Year, everyone. Some big changes are occurring in our US housing market as the number of reduced price listings has more than doubled compared to 1 year ago. On top of that, last week, housing inventory posted the biggest increase so far this year. So in today's video, I'm going to share exactly what's happening right now in our US housing market. So I'm going to give you guys an update regarding housing inventory, the number of price reductions, home prices, and of course, much more, so you guys can make a more informed decision about where you should be buying or selling a house. And speaking of buying or selling a house, check out that link below, which is homeandmoney.com/Jason, to get connected with a great real estate agent in your neck of the woods. So let's go ahead and dive right in. This is actually my favorite video I make every single week, which is based on weekly data from Realtor.com. They provide year-over-year changes of asking prices, housing inventory, new listings, days in the market, and of course, much more. And I actually love sharing this data with you guys because I get to share my fancy Excel spreadsheet here, which is actually data I pulled from Realtor.com's website. Anyways, can't talk today. So here's what we have for you guys today. This is for the week ended December 24th. So here's a look at home prices. Let's have a look at asking prices, I should say. So asking prices on a year-over-year basis only increased by 9.6% compared to 1 year ago. It may sound like a lot because, of course, it's more normal to see home price gains in the range of 3 to 6%, and of course, not 9.6%. But because these numbers are still very high, that's one reason why the number of reduced price listings and also the share of price drops has been absolutely skyrocketing from 1 year ago. In any case, look at this, because the year-over-year changes right now at 9.6%. This is actually the third consecutive week where we actually saw single-digit increases in home prices or asking prices compared to 1 year ago. And on top of that, as a note right here, this is actually the third time in the last 52 weeks that we actually saw year-over-year home price gains dipping to single digits. Additionally, for the week ended December 17th, the gain was only 8.7%. This is actually the smallest increases in asking prices in 2022. But wait, there's more, because when looking at asking prices over the last 11 weeks, which is right there, asking prices in the US have decreased in 9 out of the last 11 weeks in the US. Now keep in mind, this of course is due to seasonality of our housing market, where our housing market tends to slow down in the second half of the year. But also, in my personal opinion here, this decrease of asking prices is really due to a decreasing in home buying demand. Speaking of decreasing home buying demand, have a look at this. This is active listings compared to 1 year ago. And last week, we actually saw a 63.1% increase of active listing inventory compared to 1 year ago. This means we have approximately 63% more houses listed for sale right now compared to the same time frame in 2021. Also, for a gain of 63%, this is by far the biggest increase of housing inventory on a yearly basis so far in 2022. This is on par with what AltosResearch.com is reporting as well, because they're reporting inventory gains of 64% compared to the same time frame in 2021. In addition, have a look at this, because inventory gains have been increasing in 14 out of the last 15 weeks, despite new listings decreasing for 25 consecutive weeks. So with that said, let's talk about new listings, because new listings, again, have been declining compared to 1 year ago for 25 consecutive weeks now. So it's absolutely eye-opening to see that new listings have been declining for 25 consecutive weeks. And despite that, we've been seeing gains of inventory in 14 out of the last 15 weeks. Therefore, this increase of housing supply is due to a decrease in home buying demand, as we're seeing fewer closed home sales. And of course, it's taking longer for houses to sell compared to 2021. So one thing I do want to mention regarding new listings is that it's really remarkable to see that active listings or housing supply has been increasing despite the fact we've been seeing fewer new listings compared to the same time frame in 2021. And this landscape of our housing market would look a lot worse if we actually had an increase of new listings every single week. But despite that, we've actually been seeing a decrease of new listings for 25 consecutive weeks. Now, don't get me wrong, because our housing market has a lot of headwinds that it's facing right now, but this landscape would look a lot worse if new listings were absolutely skyrocketing, but in fact, they're not. Let's also have a look at how fast or how slow houses are selling across the United States here, because it's taking actually longer to sell a house compared to the same time frame in 2021 for 22 consecutive weeks. And because houses are taking longer to sell compared to 1 year ago for 22 consecutive weeks, this is one reason why housing inventory has been increasing. Also, for the week ended December 24th, it's taking approximately 11 days longer to sell a house compared to the same week in 2021. This is actually the biggest increase of 2022 so far, a gain of 11 days compared to 1 year ago. By the way, this is very close to what Redfin's reporting as well, because they're reporting a gain of 10 days compared to 2021. Let's also have a look at the number of reduced price listings compared to 1 year ago, because last week that increased by 105.5%. Additionally, we're seeing triple-digit increases in the number of reduced price listings compared to 1 year ago in 7 out of the last 8 weeks. Now, this is so much different compared to the start of the year, because look at this. From January all the way until more or less March, we actually saw decreases in the number of reduced price listings on a year-over-year basis. But now it has been increasing by triple digits in 7 out of the last 8 weeks. I also want to talk about the share of reduced price listings according to altosresearch.com for the week ended December 23rd. And that is at 40% nationwide, which means more or less that 4 of every 10 houses listed for sale have already reduced their asking prices. About 7.5 months ago, for the week ended May 6th, the share of reduced price listings was only 20%. Therefore, the share has more or less doubled in the last 7.5 months. One thing you guys definitely should be aware of, though, is that this share has been decreasing ever since mid-November this year. Also at 40%, this is more or less the lowest levels since early September of 2022. Now, here's exactly what I mean by that, because for the week ended December 23rd, according to Altos, the share of reduced price listings in the US is at 40% and has been decreasing ever since really early parts of November. And also peaked at around 43% in mid-November here. And at 40% for the week ended December 23rd, according to Altos, this is the lowest levels since early September. Even though the current levels right now are at the lowest levels since early September, the current levels right now are still much higher compared to the past few years. Because back in 2021 at this time, the share of reduced price listings was around 25%. Also back in 2020, it was around 24%. And pre-COVID, back in the early parts of January 2020, the share was approximately 29%. I also want to share how last week compares to previous years going back to 2017. I would provide you guys data going back before 2017, but Realtor.com only provides data going back to July of 2017 on a weekly basis here. And then I'll share a summary at the end of this video, as well as some predictions as well here. So here's a look at what happened over the past several years here for the same week, more or less, this last week. And I believe the best comparison is actually back in 2018 when rates were actually increasing. They went from about 4% to around 4.5%, which is obviously a much smaller gain that we saw this year or back in 2020, where rates went from 3.3% and ended the year about 6.5%. Any case, so look at 2018 because asking prices only increased by 7.6%. Whereas last week, they increased by 9.6%. Also, we only saw gains of 5.4% compared to 2017 for active listing inventory, whereas last week it increased a whopping 63%. New listings actually increased, whereas of course this year they decreased. Also, houses were taking actually 4 days faster to sell compared to right now 11 days slower. And here's a big one right here because the number of reduced price listings compared to 2017 only increased by 20.3%, whereas last week they increased by 105.5%. All right, that was a lot of information to go over in today's video. So I actually want to share a summary and then some predictions here in a little bit. So number one, inventory has been rising in the US in 14 out of the last 15 weeks. It also rose by 63% last week compared to last year, the biggest increase of 2022 so far. This growth of housing supply is very significant though, given the fact there's been fewer new listings compared to 1 year ago for 25 consecutive weeks. And on top of that, new listings have been decreasing by double digits for 11 out of the last 13 weeks. Again, our housing market would look a lot worse if new listings were skyrocketing, but they're not. Of course, not to say our housing market's without its challenges though, right? But of course, if new listings were absolutely skyrocketing, our housing market would look a lot worse. So number two here. Mortgage rates have been more or less increasing since mid-December of 2022 from 6.1% to around 6.5%. And on top of that, rates have more or less doubled in the last 12 months. Rates are at the highest levels since November 30th last year, but still well below the highs from the end of October when rates were averaging about 7.4%. Now rates are averaging about 6.5% in the US. Of course, these are rates for people with exceptional credit, right? And also putting 20% down. Summary number three here. We saw a huge increase in the number of reduced price listings compared to 1 year ago over the past 3 months. We also saw triple-digit year-over-year gains in 7 out of the last 8 weeks in the number of reduced price listings. On top of that, the share of price drops has nearly doubled from 7.5 months ago, but the share has been decreasing slightly since mid-November. And number four, on average, houses are taking longer to sell for 22 consecutive weeks. Again, though, this is a lagging indicator because days in the market is a measure of closed home sales. And again, days in the market a measure of the time frame for when a home seller lists their house for sale to when they ultimately accept an offer from a home buyer. But that time period is not recorded until the house actually closes escrow or the sale is finalized. And speaking of days in the market, I expect this to increase in the weeks and months ahead due to our seasonality of our housing market, but also due to a decrease in home buying demand. Now let's talk about some potential huge changes ahead, given the fact that rates have been above 6% ever since October 1st of 2022. Which is absolutely crazy. Number one, buyers have been priced out or they're deciding not to buy a house. So rates have increased approximately 3.3 percentage points over the last 12 months, and that causes a 33% decrease in buyers' purchasing power. In other words, because rates went from 3.3% to around 6.5% by year end, that causes a 33% decrease in buyers' purchasing power. And number two, there's still a housing affordability issue in the US. It's going to cost you approximately $550 more per month to buy a house right now compared to 1 year ago. This is based on an average price home in the US. And that is around a 45% increase in your average monthly housing payment compared to 1 year ago. However, for home buyers looking to buy an average price home today, compared to approximately 2 months ago, you're going to save approximately $200 per month compared to 2 months ago because rates went from 7.3% down to around 6.5%. So even though it's going to cost you a lot more compared to 12 months ago to buy a house, this decrease in rates that we've been seeing over the past 2 months is going to save you around $200 per month. And number three, we'll likely see more declines in home prices and especially home sales over the next couple of months. This could be significant given the rise in rates and a giant decrease in pending home sales in November that were reported by the National Association of Realtors just a couple weeks ago. So the level of pending home sales in the US, at least for the end of November, according to data from the National Association of Realtors, is at its lowest levels on record, excluding the onset of COVID. So in other words, because we're at more or less all-time record lows for pending home sales in the US, going back to 2001, we should expect a huge decrease of closed home sales in the next month or so. And because mortgage rates have been more or less above 6% since October 1st of last year, this is unlikely to cause an increase in home buying demand. And therefore, I expect a slowdown will continue in the near term in the US housing market in general. We also could see negative year-over-year price growth on a national level very, very soon. So according to the latest data from Redfin, which is actually through the end of December, they're reporting that the median sold price in the US has only increased by 1% compared to the same week in 2021. So we're getting very, very close to negative year-over-year price growth in the US. Also, according to a report from Redfin last week, approximately 34% of the 50 most populous US metros have posted negative year-over-year price growth as of the end of December already. And number 4, to combat inflation, the Fed plans to continue raising the federal funds rate. This increases interest rates for HELOCs, credit cards, and new auto loans, but saving rates will also increase as well. We probably won't have much long-term relief for mortgage rates until inflation winds down further. However, rate hikes by the Fed should be smaller in 2023. The street is actually expecting only a 25 basis point rate hike in February. In comparison, the Fed raised rates by 75 basis points 4 times in 2022. And number 5, mortgage rates were above 7% for the vast majority of October. We're seeing the true effects of these high rates in November and December stats. We're seeing huge declines of closed home sales, huge decreases in pending home sales, and also decreases in prices as well. So according to data from Redfin, the median sold price in the US has decreased about 10% since June of 2022. And by the way, the National Association of Realtors will not have December's data until late January here. That's actually why I really like Redfin as well as Realtor.com's more timely updates for the US housing market. And number 6, subscribe is for free. And these videos literally take me hours to make based on a lot of analysis that goes into this video. Hope you guys appreciate that. And of course, if you do, then please hit the like button and also consider subscribing. I appreciate you. Hope you have an awesome day.